We never go through a guide episode without talking about my age somehow. It just seems like impossible. Welcome to Guide to the Global Economy. I'm Josh Lipsky, Senior Director of the Atlantic Council's Geoeconomics Center. In today's episode, we look at Cuba's increasing economic reliance on Russia. It's a throwback to the 1960s era of foreign policy and economic policy. We also look at countries other than China who are increasing their trade with Russia, and we take a specific focus on India. But before we do that, I want to bring in Niels Graham, Assistant Director at the Geoeconomics Center. Niels, for the lead today, we focused on the issue that's on everyone's mind, both in DC and around the world, the debt ceiling. A lot of people are talking about the debt ceiling. We at the Atlantic Council wanted to look at the international angle, especially with President Biden just coming back from the G7. And I think you and I had this back and forth with the team of, well, what is it about U.S. treasuries, U.S. bonds that make them so special? And we dug into it.
Exactly. You know, everyone in DC is talking about it. We wanted to bring in this international comparison, and that's kind of what we did with this week's lead. We wanted to look at the size of U.S. Treasury markets in comparison to global sort of Treasury debt markets, as well as kind of their rating and how these correspond to the importance that Treasuries have made in global financial systems.
So let's take a look at the data.
Exactly. So as you can see here, you know, U.S. Treasury markets are basically as large as the next 7 largest Treasury or debt markets combined.
This is the G7 plus China on one side and the U.S. on the other. So this is most of the world's largest economies stacked up against the U.S. in terms of what they issue in terms of sovereign debt.
Exactly. So you see the U.S., issuing almost $27 trillion worth of treasuries. And the 2 next largest countries, Japan and China leading at around 8.5 trillion and Japan right behind, closer to 8 trillion. But really, nothing comes in close to the US in terms of scale and size of their own treasury markets.
And nothing, at least for now, comes in comparison in terms of quality, right? These are AAA rated. The US is AAA rated for now, as of filming of this episode, so things could change. But the only other AAA rated debt issuers here is Germany.
Exactly. And as you can see again from the graph, German debt markets are really only something like 1/30th the size of U.S. Sort of treasury markets. And they really have no room to grow. If you look at kind of German fiscal constraints by themselves, their government can't really issue more debt. So one of the real unique aspects of U.S. debt, the real unique aspect of U.S. economy, is its ability to export this debt abroad, export these sort of assets abroad that have become so integral to the global financial system.
Yeah, just to take a step back, I mean, this is a tremendous privilege for the U.S. to issue this debt that everyone around the world wants. It finances so much of the global economy, but also our U.S. domestic economy.
Exactly. And even with the event of a U.S. default coming up, there's a central question: where else are you going to go? And this is exactly what we're trying to look at.
This is what's really interesting, because if you look at this chart, and this is what we talked about a little bit, we called it "there is no alternative." Mm-hmm. That was a phrase that became popular during COVID because it was said that you have to basically buy stocks because the Fed is feeding the market, and so this phrase on Wall Street, TINA, there is no alternative. Mm-hmm. But we kind of applied it here to the U.S. Treasury market because the question is, let's say the U.S. defaults. It's possible, and we might disagree about this, that interest and increase in buying of treasuries actually goes up.
Exactly. To what we were talking about earlier, in the event of a U.S. default, there's immense global uncertainty in terms of financial markets, both within the U.S., but treasuries underpin so many different contracts, so many different relationships around the world, and a lot of folks just really have no idea what will happen. So in times of great uncertainty, you fly to the safest assets. And even if the crisis stems to the United States, there firstly really is, again, no alternative. But on top of that, treasuries still remain the safest asset overall, the highest rated asset. And you really have nowhere else to go.
Can we just think about how ironic this is? So, okay, understand global financial crisis. People went to treasuries. There's global economic crisis. Maybe it started in the U.S., but it didn't start necessarily just in the U.S. government. People bought U.S. treasuries. COVID makes sense. People flocked to U.S. treasuries. International economic crisis, safe asset, as you said. But this is a U.S. default. And in a U.S. default, it is possible that global investors will say, boy, this U.S. default caused all these global economic repercussions. Markets are going crazy. People don't know what's going to happen. This is a really chaotic situation. I should go buy U.S. treasuries. Is that basically what we're talking about?
No, more or less. I think, again, there's just immense uncertainty. So when investors see immense uncertainty, they're looking for incredibly safe assets and they're looking for incredibly liquid assets. So U.S. treasuries, again, really are the only asset that kind of check both boxes. Yeah. So we should probably see a surge in at least some investors moving back to U.S. treasuries.
And as you said, Germany, not scale and size, so can't match it. The UK, we just saw the crisis they went through a year ago. China, if you need a liquid asset where you can get your money quickly, you're not investing in China. Japan has their own issues of intervention into their bond markets. So there just really is no alternative. I guess the question, stepping back and thinking about this, is no one should feel good about this. Even if U.S. Treasury markets do okay in a near term of default, there's still going to be widespread U.S. and global economic fallout.
Exactly. To be clear, investors may move to treasuries in the short run, but this will shake confidence in the U.S.-led global financial system. And, again, we're coming off just 2 months after another major bank failure in the United States.
Yeah,
so I think there's a great narrative around sort of long-term sustainability of U.S. leadership in global finance. So maybe in the short run, right, we see a surge back to treasuries. But in the long run, I think investors are going to be increasingly looking at how valid it is for the U.S. to underpin the global financial system, whether they should be hedging their risks, whether they should be looking at other assets abroad. It really puts into question the medium to long run sort of viability of a U.S.-led financial system.
I agree with you, and I bet that's an argument that China's going to lean into, even if we don't get to default, just coming to the precipice of it. So.
No, exactly. I think, again, we've really shaken the trust of global investors, U.S. investors as well, in a sort of U.S.-led financial system.
Don't mess with this extraordinary privilege like we're doing, I think is the bottom line.
Exactly.
So, Niels, thanks so much for looking into it for us.
Thank you.
In our Under the Radar segment today, we're going to look at Cuba's deepening economic relationship with Russia. No, it's not the 1960s, it's 2023. But we wanted to explore this new development, especially in the wake of sanctions, and how Russia and Cuba are turning back to old friends. So I want to bring in Sophia Bush, managing editor of the Guide to the Global Economy. Sophia, you looked into this issue for us. What did you find?
Right, so a new development happened last week. Basically, the Russia-Cuba Business Forum happened in Havana, and out of it we got new agreements. So part of that is Cuba's allowing Russian investors to have 30-year land leases, which would kind of make investment easier. Land ownership is pretty complicated.
In Cuba, it's a communist country, right?
Right, and then so the Russian Mira payment system, which is essentially the Russian alternative to MasterCard, but not used in too many countries, that's going to expand. And then we'll also have more talks of a resurgence in the, Soviet era port and maritime link. So kind of making trade easier between the two.
Okay, so ports, basically deepening trade, Visa alternative Mir, MasterCard alternative Mir, basically deepening payments, and then land issues, land purchases from Russia to Cuba. There's a lot that happened in the meeting, but just three takeaways that are important to focus on, the deepening of the relationship. But what's different now if we think of 2023 versus the 1960s? It's not the Cold War anymore, or maybe it is.
No, it's definitely not. I mean, for example, in the 1960s, in 1960, the year actually, so the U.S. terminated sugar imports from Russia, and then the USSR was able to swoop in, and they made a deal to buy the exact quantity that the U.S. terminated.
You wouldn't see that today.
No, I mean, it was such a strategic priority for Russia in the 1960s, and I think that's really not the case now.
Is it fair to say that Russia's relationship with Cuba in the 1960s, as you said, is a strategic priority? Obviously, nuclear weapons in Cuba, all the ways it was so close to the U.S. And now it's just that Russia doesn't have that many friends that are willing to deal with it. Is that reasonable?
Yeah. So I mean, looking right now, Cuba's economy is in a very bad spot, and so Cuba desperately wants Russian investment.
Right, so Cuba needs the friends.
Right, and then Russia also needs to have markets.
Yeah.
So I think right now there's that kind of mutual desperation effect.
I think that's probably a good way to describe it.
Right, but it's not the same geopolitical strategy that was going on in the 60s.
And Cuba does have other trading partners and more trading partners than it did in previous decades.
Yeah, Russia is not number one.
What is number one?
So it depends if you're talking about imports or exports.
Okay.
But Canada is a major source of Cuban exports.
That's interesting.
Right, and actually the U.S. is one of the fastest growing sources of where Cuba is importing goods
to your point
from.
That this is not the 1960s.
Exactly, yeah. So, I mean, yes, there's continuity. The U.S. Embargo's obviously still in place.
Yep.
But this is not the same environment. as it was.
Well, we'll keep looking at it because I think seeing how Russia deepens its relationship with countries outside of the ones we talk about the most is actually kind of key to the under radar work we do. So thanks so much, Sophia. For By the Numbers, we wanted to look at countries other than China who are increasing their trade with Russia. There's a lot of talk about what China and Russia are doing. We write a lot about that at the Geoeconomics Center. But they're certainly not the only country that's expanding their trade, especially in energy with Russia. I want to bring in Gank Broussard, Assistant Director here at the Geoeconomics Center. Gank, you looked into this for us. Which country jumped out to you, other than China, as increasing trade, especially in energy with Russia?
The country that jumped out the most is India, and this is not a surprise. We've heard a lot of chatter about it for the last year, but really the scale of it is what is surprising.
Well, let's look at the scale and tell us what the big number is.
Yeah.
Okay, so that is significant.
It's 1,500, Josh. It's
1,500%.
Big number. Yeah. And as you can see, just after the invasion is when Indian imports of Russian oil increased dramatically, and immediately, so within 2-3 months, you see immediately that there's a big spike over there, and it has sustained since.
Just to walk everyone through this, so you're going back to January 21, a year later, January 22, invasion.
Yeah.
Sometimes charts don't speak as clearly as this one, but there's the spike, as you said.
Yeah, and to be clear, so China begins from a higher base and substantially so.
Yeah.
So when China is increasing by around 25, 30, 40%,
that
is still a very big jump in actual volume, in actual amount of dollars.
Billions and billions of dollars, because
yeah.
China, what they're buying is at a much higher level than India. This is the percent change, not the total. Yeah. No one should look at this chart and think, oh wow, China's doing nothing vis-a-vis Russia. They're doing a lot. Yeah. It's about the relative shift, basically.
On a relative scale, India almost began from zero. India was almost not importing any oil, and then it's really started importing a lot of oil.
So why? I mean, walk us through. Why is India suddenly importing so much Russian oil?
So in India's case, oil became really expensive. In 2022, India's had historical ties with Russia. And for India, this was just cheaper oil. India is not a country that can afford expensive oil. It had an option to get cheaper oil. It did so. It was able to make profits for its refineries, and it also used some of the remaining refined oil to export to other countries. And this has become a sticking point.
Well, that's very interesting because there's the cheaper oil, which makes sense. We heard this from the Indian finance minister before. She has said, if I can find a way to have a cheaper import of energy for my country, I will find it. And you're clearly seeing that here. But then there's the question about the price cap, sanctions evasion. Are there things that are going through India and then going out to other countries?
Yeah. So one of the big destinations of refined oil from India, and this is a key point, that this oil is refined. It's not crude oil just coming to Russia that India is just reshipping, but it's actually processing it. It's going to the EU. And a lot of people think that this is actually a problem, that this is a bug in G7 sanctions, but it's actually a feature. Because if you think of it, if the G7 was to just cut off Russian oil from global markets, the second largest producer of oil, that would send oil prices through the roof. All of a sudden, you would be looking at a global recession. You would be looking at even stronger resistance to general sanctions from the US, from the West. And so it was a specific feature that was designed into the sanctions that, okay, some amount of oil will still flow through from Russia.
Yes.
But Putin will make less money from it. So there's a price cap, there's other features.
It's a very important point because, we say, oh, there's an embargo of Russian oil. Yeah. That's not really true. Russian oil is flowing all over the world. It's certainly flowing to India. And from India, it's also flowing to other places in the world, to your point. Yeah. And that is by design because the world actually needs this. The question is how you can limit the revenues into Russia, into Putin, as you do it, and that's what the price cap's about. I want to talk about the G7. President Biden just came back from Japan, from the G7 summit. One of the most dramatic moments was President Zelensky coming to Japan, to Hiroshima, and I thought what was so significant was not Zelensky meeting with the G7. He's met with all of those leaders before. It was actually sitting down with Prime Minister Modi of India.
Yeah, and Prime Minister Modi sat down with Zelensky in a room that also included the Foreign Minister of India, the National Security Advisor, and so they really did have a conversation, and I believe this must have come up because it's a big elephant. It's a 1,500% elephant.
That's a good way to describe it.
That was in the room, and we haven't.
If this chart didn't come up, I bet this issue came up one way or the other.
Exactly, and it's unclear what exactly was talked about in that meeting.
Yeah,
but
Because Zelensky has really not had the opportunity, certainly since the invasion, to meet with Modi. I don't know how many times they met in the past, if ever. Maybe they have. But he sees the G7 a lot. He doesn't see other countries that are really doing a lot with Russia. And I just have a feeling he challenged Modi and the government on this issue, and Modi probably responded to similar to what you had said. I am trying to support my country, my economy, and this is cheap energy, and it's compliant with the law.
Yeah.
I would imagine that would be the response.
And that I imagine that would be the response as well. But on the EU side, this has actually become a sticking point because Josep Borrell, who is the foreign policy chief of the EU, has actually said he in recent weeks he's targeted Indian refined oil that is coming from Russia, making its way to Europe, saying that India getting oil from Russia is okay, that's part of the design.
It's legal,
But that Russian oil that makes its way to India, then coming to the EU, was not intended when these sanctions are designed.
So this is something we may see further EU action or G7 coordinated action going forward. The big takeaway for me as I look at this is we can't spend all our time focusing on China-Russia relationship. It's extraordinarily important, diplomatic, politically, economically. But other countries' relationship with Russia is also important. So Ngong, thanks so much for looking into it for us, and we'll keep on top of it.
Thanks, Josh.
Thanks so much for joining us for this edition of Guide to the Global Economy. Like this video, subscribe to this channel, leave us a comment, tell us what you think we should be covering in international economics that everyone else is missing. We'll have more updates next week on the debt ceiling, China, Russia, and everything else that's happening in the world of finance, national security, and economics.